Hey guys, hope you and your families are doing well. This video is going to be a no BS guide to how to actually trade stocks. Like, how do you actually identify a high quality setup? How do you control the risk? Create that asymmetric risk versus reward trading opportunity for yourself. How do you mitigate the risk to get risk-free on the trade? Risk-free trades create carefree states of mind. And then what are the selling rules, selling guidelines that you're using to optimize the profits, both in terms of monetary gain, but efficiency of the monetary gain as well. So what you're going to see is a bar by bar deliberate practice session in ticker ZS. I'm filming this introduction after doing the bar by bar session for you. So what are you going to see? You're going to see me working through bar by bar, and the trades that you're going to see return these results. So you're going to see a win rate of 80%. You're going to see a risk to reward ratio of 6.46. You're going to see the average gain comes in at 12.92%, and the average loss comes in at 2%. So those of you who have studied Mark Douglas's work in terms of trading psychology will know the importance of being able to have an edge, so identify your edge, predefine your risk, and then have a systematic process for taking profits when the market makes them available to you. Now, the way I kind of use that in my own language is, number one, you got to identify a high quality setup. Number two, control the risk, create an asymmetric risk versus reward trading opportunity. Number three, mitigate the risk. Number four, optimize the profits. So as I go through bar by bar, you're really going to understand the framework and the lens in which I see the market and how I go about targeting setups. Market Smith are today's video sponsor. If you're interested in a discounted trial, then there is a link in the comment section below. So we're going to be using the TradingView bar by bar replay function for ticker ZS, which the company name is Zscaler, from the March 2018 IPO. So we're going to be going from the IPO day to present day, so around about 6 years worth of data. And what I want to do in this video is show you that trading is a skill set, and you can improve your skill set if you deconstruct the trade and you think about it about, number one, identify, number two, control, number three, mitigate, number four, optimize. You can improve your skill set in each of those areas. So the identification, the controlling risk, create those asymmetric risk versus reward trades. Number three is then the risk mitigation. So how do you take the risk out of the trade, free roll the trade? Then number four is how do you optimize the profits? What are the selling rules, selling guidelines that you are using to optimize the profits, both in terms of monetary gain, but efficiency of the monetary gain as well. Now we're going to be coming into earnings here. So what I'd like to see is a great reaction to the earnings to indicate large operators are in here. So good pre-earnings run. Okay, good volume coming through on this earnings gap, breaking out of this IPO base here. So what I'm now going to look for is a flag, pennant, wedge, Darvis box, something like that, just into the 10-day EMA, maybe the 21-day EMA, and then I'm looking for specific candlesticks. So this is all in the identification. So really good reaction to the earnings there, 52-week high coming through. Like it, we can go and take a look. So there was a surprise there of 48%, bit of a surprise on the revenue side of things as well. So okay, nice, stocks in an uptrend into all-time high territory, but I'm not going to be chasing up there. Okay, I'm going to watch and wait for a pullback. Now you get a shakeout demand tail here, but the base duration is short. When I think about the initial risk, it's going to be about 9% versus a 20-day ADR percentage of 6.5%. That risk metric there is all out of whack. Okay, I don't want to be doing that. Okay, so what I'm going to do is continue watching. Okay, the stock kind of pulls back down. So first retest of the 21-day EMA. The ADR is very high on this stock at 7%. Anything over 5% I would classify as a high ADR percentage stock. If I'm looking at the initial risk here, if I get the risk tool lined up properly, it's going to begin with a 7. For me, initial stop loss beginning with a 7 is a very, very high stop loss, and I don't really like the bar beforehand. If you look at that bar there, it opens on the high of the day, goes out right on the low of the day. I'm not really liking that. I'm gonna watch and wait. Maybe this can start tightening up. Okay, kind of volatile doji in there. Okay, an inside bar moving to the downside, but the volume is drying up. Okay, now there's a shakeout demand tail. So interesting, the low of that shakeout demand tail kind of undercuts all the lows of these bases, undercuts the low of the earnings gap. Volume has now begun to dry up, so that's telling me there's not much supply at these levels. So I'm going to put the Fib retracement tool on this one and go and look at the initial risk. I'm going to show you the indicators I use. So 6% is kind of really at the high end for me. The ADR is 7.5%. So, okay, interesting one here. Let me just show you how I set the Fib retracement tool up. I get these questions, so go find the Fib retracement tool over here. I'll double click on it and just explain it to you. So 0 is going to be the stop loss level. 1 is going to be the entry level, 2 is going to be 1 times whatever the stop loss level is, and then 3 is going to be 2 times wherever the stop loss level is. So then the free roll targets is selling half at 1 times the stop loss, and that could be the initial stop loss, could be that you move the stop loss up like this, because then you're going to be adjusting your free roll targets, and then 2 is going to be when you have the, let me show you like this, 3 is then going to be 2 times, there's a lot of numbers aren't there, so 3 up here, so 3 is going to be 2 times the initial stop loss and or new stop loss if you start dragging it up, so you can sell 1/3 at 2 times the stop loss level, which you may have to adjust the stop loss up if you want to do some active risk mitigation to free roll the trade. Now, for the purpose of this video, I'm going to be filling in a Google Sheet, as you are going to see as we progress throughout this video, so we can record the statistics of this session, and that Google Sheet is available to you for free. There's a link in either the comments or the description of this video. So I'm going to be targeting it with a hypothetical buy stop limit order moving through the high of this bar. Now, for the purpose of these videos, they just float. We're going to assume perfect execution, assuming this gets filled. So let's target it there. Okay, so we have our entry here, but it doesn't get out the gate very well. It's kind of just like a doji bar. Now, what I'm going to do for my free roll target, I'm going to make it a little bit harder on myself. I'm just going to say selling 1/3 of the position at 2 times the initial stop loss. I'm not going to play around with moving stop losses up like I would in my trading, like move the stop loss up, kind of free roll it earlier. I'm just going to say, right, this is my initial stop loss. I'm going to free roll by selling 1/3 of the position at 2 times the initial stop loss, and then we're going to move into optimizing profits part of the trade, which is going to be more so 10-day, 21-day as trailing stops. Okay, the stock's starting to move up. Okay, that's not a bad bar. I like that shakeout demand tail as well. If you've watched the blueprint video, you'll be familiar. Have we achieved our target yet? Yeah, so the high of the bar there is 40.07. So I then use a sell limit order to free roll the trade. So what we've been able to do there is we've been able to free roll the trade. Okay, so I'm just going to put a kind of marker in there. Now, again, what am I looking at here? Well, this could turn into a kind of cup and handle base. It's now running more so into the highs here, so trap buyers, so overhead resistance, psychological resistance. You got traders like me looking at that thinking, yeah, I'm going to free roll into that, I'm going to take part of the position off into that. So let's then play this forward a little bit. Now, what I'm going to do is just delete these lines just very, very quickly, and let me just put one in like this, just so I can kind of see the trade a little bit better. So what I'd then be doing in real life is then adjusting my stop loss up. So for the purpose of this, I am now going to do that. Okay, so my initial stop loss is there, but what I'd now do is I'd adjust it up. Now, again, this is about, I appreciate if this is the first time you're watching this, you may be like, what on earth is happening here? This all seems, but this is trading, right? When you treat your trading as a skill set. So whenever I'm taking an entry, which if you watch the blueprint video and other videos on the channel, you know I'm looking for trigger bars, shakeout demand tails, gap down, reverse bars. After those entries, I'm expecting the mental framework to happen, and this is the mental framework: pop, test, reversal. Okay, so this is the pop, the test, reversal, which in essence looks like a higher high, higher low, followed by a higher high. Pop, test, reversal. That's just the language that I use because it then makes sense to me, and it really helps me with the management of the position as well. So if you then deconstruct kind of the framework here, okay, identify. How do we identify a high quality setup as per my criteria? How do I control the risk? Try and create an asymmetric risk versus reward trading opportunity. Then number 3 is the risk mitigation. How do I free roll the trade, take all the risk out, so then I am risk free on the trade, and risk free trades create a carefree state of mind. If you've listened to Mark Douglas's work, so risk free can create carefree states of mind. And then I move into the 4th part of the trade, which is optimizing profits. Okay, what are the selling rules? What are the selling guidelines that I'm then using to optimize the profits, both in terms of monetary gain but efficiency of the gain as well? So what I'd be looking at here, okay, this has now gone through that kind of pop, testing, action, reversal. What I'd want to do is get my stop loss to break even now, or just underneath the 21-day EMA, because if this starts rolling back over like this, the chart is going to look wrong. I'm expecting this to kind of build a handle up here and then break to the upside. That's kind of the mental representation that I have in my head. So, okay, starting to tighten a little bit, so I'd just be now keeping the stop loss maybe underneath the low of the shakeout demand tail, underneath the 1021 as well. Okay, starting to go a little bit. Okay, I think I'd just be kind of trailing it, something like that. No close below the 10 yet. Okay, pulling down. Okay, first close below the 10-day EMA. It's 3 red bars in a row. I wasn't looking for that. I was looking for this to keep going. Supply shoot as well, deterioration in the relative strength. So what I'd do is I'd take off another 1/3 of the position there, okay, into the closing below the 10-day EMA. Okay, nice reversal there. I'd probably have my stop loss, maybe something like that now, giving it what I feel is just enough room. I think that's a pretty volatile candlestick. Really don't like that bar. So what I then associate with distribution, so you're trying to kind of train your pattern recognition to what does absorption of supply look like, what does accumulation of supply look like, but also what does distribution look like. That looks distributional to me. The increasing volatility with red candlesticks, bearish looking candlesticks like that is a sign of distribution to me. Okay, I don't like that. So what I do is basically just put my stop loss on the low of that bar for now, close below the 21, and I'll exit. Okay, it's still kind of there. Okay, there. I'm knocked out there, okay, at this price level there. So see what I mean? You were kind of getting some warning signs, and this is the beauty of bar by bar deliberate practice. You will start picking up on the warning signs. As Livermore said, the stocks will give you a tip off of when to get in, they'll give you a tip off of when to get out as well, and that's how you kind of build in the identification and everything down to the optimizing profits part of a trade as well. So that's going to be the exit there. So we'll go and then put this in our spreadsheet. So we were selling this one here, something, it was 39.99, wasn't it? So something like that. So we've got 12%, so we've got 12%, we've got 11%, we'll round it down, 12%, 11%, and in there 6%. So we've got 12, 11, and 6. So what we do is we go 12, we go 11, and then we go 6. So our average gain on the trade there is 9.67%. So that's going to be a pullback buy. So I'm going to put pullback in here. I'm going to put Zscaler. This spreadsheet is available to you for free. It's in the description or the comment section of this video, and we're going to go 9.67%. Okay, like that. Now what this is going to do is it's going to do a return simulation, imagining that you are putting in the entirety of your account in every position, which is obviously not going to be a prudent thing to do in terms of risk management, but it's really just for kind of visual purposes, right? But you're going to see the average gain and things like that starts coming. Certainly when we start getting this in, then you'll see the average gain. We just need to get one in there for the breakout side of things as well. Then all the average gain and stuff will start coming through. That's going to be the first trade there. So now what I'm going to do is, okay, there's potentially base there, okay, test of the 50-day, some shakeout demand tails, some tight little inside bar on the 50-day. Maybe there's a trade there. I don't kind of mind that around the 50-day. I don't really like how it got there. But this one here, if I was going to target it, it'd be about 3%, try and free roll at this level here, which would be 38.31. Let's play it forward, see if we get filled. Okay, so we're filled on this bar here, so that's going to be our entry bar. I'll just flag it like that. Can it pop up to the green level? So it can pop up to the green level. So now we've been able to free roll the trade. Okay, so I'd use a sell limit order. So what we've been able to do is free roll the trade there, and our stop loss remains here. I would probably move my stop loss up to there now, but we'll give it a little bit of room. I don't like that bar, looks quite distributional to me. I'll tell you what, I'll do it more so how I wouldn't trade. So we've been able to free roll it. I would now push my stop loss up. Okay, so what I would do here is I'm just going to do it with a red line like this. Tell you what, let's just do it like this. I would push my stop loss to there, nearly break even on the remaining part of the position. I don't want to see this start rolling back over. Okay, I don't like how it's kind of acting there. Okay, starting to move to the upside. So what I would probably do here, what would I do here? So again, this is then the trade management. This is where the games really played. So I'm in the position, I free rolled it. I still got 2/3 of the position left. I'm thinking about adjusting my stop loss now, maybe up underneath the low of these bars, and then backstopping in a profit as well. So then I'm backstopping in a profit of, let's say, about 1% or so. Yeah, I'm going to do that. This is a nice bar. Opens on the low, tries to go. I'd do that. Okay, still kind of moving to my stop losses just here. Okay, I appreciate there's a fair few lines on your chart. Oh, I don't really like that bar. I don't really like that bar. I'll give it one more. I've got my stop loss in there. How much actual risk am I giving it? So I'm just going to backstop in a profit of about 1% on the remaining 2/3, and let's see if I get stopped. Yeah, so it actually gaps down to here, and then I get stopped out there. So what we're going to have there is we're going to have a gain of about 6%. So again, because we're then free rolling it 2 times, the initial stop loss is about 3%, so we're free rolling it 6%, and then we get knocked out 1%. So now what we just go and do is we go and input that into our spreadsheet. So we go 6, we go 1, and we go 1. That's going to be another pullback buy. So I'm going to put pullback, I'm going to put Zscaler, and the average gain there is 2.67%. What this is going to do as well in terms of bar by bar deliberate practice is teach you that not every stock is going to be a massive winner. Not every stock that you trade, or not every trade that you take, is going to be a massive winner like you see in the textbooks. Okay, trading just doesn't happen like that. Now in hindsight, maybe I was a little bit too quick there, right? So then I can assess and go, was I kind of too quick to be pushing my stop loss up because that's gone on a big move and it didn't then meet my setup criterion there? Maybe it is, maybe it isn't. And again, you can kind of then assess what it is you were doing, why you were doing it, things you can improve on, right? Treating your trading as a skill set. This all looks very, very volatile at this moment in time, so I'm not too interested, but I'm looking for very specific candlesticks. I'm looking for trigger bars, I'm looking for shakeout demand tails, gap down reversal bars. They're the candlesticks I like, but it's got to be in the context of a proper base and then around certain moving averages. So the 3 moving averages that I'm going to be paying most attention to are going to be the black line, the 10-day EMA. You've got the 200-day coming in being the red line, the blue line being the 21-day EMA, and then the purple line being the 50-day simple period moving average. Now this here is building a sizable base. So you see it comes down here, shake out here, here. So you've got this sizable base kind of building. You could look at this as kind of one big kind of cup-ish, but now it's starting to act interestingly. And look at the 52-week highs and how the volume is dried up. Now you get, this is a gap down reversal bar, and this is a shakeout demand tail underneath the 21, and it undercuts a lot of recent lows. And what do you notice about the volume? There's not much. That tells me there's not much supply coming to the market. So if I go there and there like that, what's my stop looking at? 6%. That is like right on the max for me. Okay, ADR of 5%, just about tolerable. So what I'm going to do, you can't actually currently see it on the screen, but I'm going to look to free roll by selling a third of the position at 2 times. So let's be a little bit quicker on this one, right? Let's play it forward. Okay, we get filled in there. So let's just put this in. So we get filled in there. So my free roll target is up here at 50.90. Now in real life, I would be kind of a little bit more mindful of where I'm looking to free roll levels and stuff like that. In that instance there, because it's $50, probably be trying to do it just underneath $50. Here I'd then probably be moving my stop loss up and kind of free rolling that, but as I said, I'm going to make it a little bit harder on myself. I'm going to wait and see if I can achieve that 1/3 at 2 times. So did that get there? Let's see what the high of that bar is. 50.90. So we could have just free rolled it just there like that. I'm going to wait till it actually kind of clears that level just to kind of really confirm it. There we go. So we've now been able to free roll the trade. Now I'm not going to keep my stop loss down here. Okay, so what I then do is, here, where would I have my stop loss? I'd want to hold into the earnings because I have a decent profit cushion of about 12% on the position. I'd probably have my stop loss just here. Let me do it like this. Actually, let's just make this line red. Give you a specific level. I'd probably have my stop loss, yeah, around about there, 47.11, something like that. Okay, I'd be holding into the earnings. Here, because of the profit cushion around about 12%, I'd be looking at implied moves and things like that. Now my stop loss would be underneath the 21 at just underneath $50 right now. So this is one that we're now in. So we're really now thinking about the optimizing profits. Okay, so trying to ride some of these moving averages and really trying to get some of these big trades. So what I'm doing is then just trailing my stop loss. It'd now be at like 52.65, right? I'm obviously going a little bit quickly in these videos for you. That for me, change of character. Do not like that bar. Okay, increase volume. The fact that it just deterioration in relative strength, I would just take off 1/3 of the position there. I don't like it, so I'd take 1/3 of the position off there. I would then probably have my stop loss, bit of room underneath the 21, around about 58, 49. I like going 47. That's just me. I don't need to get too specific in these videos though. But okay, nice shakeout demand tail. I like to see the base duration increase a little bit. Okay. Change of character, right? Clear change of character. You see that? So the stock will give you clues of when to get in. It will give you clues of when to get out. That there, for me, that there is the exit. So if we now go and take a look here, so our initial stop loss was 6%. So we're going to be selling to free roll at gain of 12%. So we got 12, we got 45, and then 39. 12, 45. So we got 12, we got 45, and then we got 39. So the average gain there of 28.67%. They're the ones that are going to really move the needle, right? So that's a higher base breakout. So now we go Z scalar and we go 28.67 like that. Okay, so they're the ones that are going to move the needle, and that's the principle of the 80-20 rule. Okay, the 80-20 principle, which is basically 80% of your profits are going to come from 20% of your trades. That's what I think and what tends to play out in reality as well. Now this is tightening, but I really don't like that bar. Okay, I'm not a fan of that bar. And then has there really been any evidence of demand stepping back in? Okay, maybe this bar here, but I'd rather see something like really like power up here to like 76 and then start pulling back down like this. I'm going to pass on that for this moment in time. Maybe we get a shakeout demand tail on the 50. Interesting. Okay, shakeout demand tail on the 50. Let's go take a look at the initial risk. I like that shakeout demand tail. 4.5% off an ADR of 5.25%. Yeah, it's fine. So free roll target will be here. 1/3 at 2 times the initial stop loss. If you want to see the indicators that I use, including the 20-day ADR percentage, pause the video, you can see the ones there. There's the ADR, there's my relative strength line, and obviously the Fibonacci retracement tool, you get it from just over here. Okay, so let's play this forward. Okay, so we get filled in there, so that's going to be our entry there. Now real life, this is what I mean by, so again, I'm going a little bit quickly in these videos. In real life, what I'd be thinking is, okay, can I adjust the stop loss up like this, and then I could be looking to free roll. So I could go stop loss lower the day, take off 1/3 of the position, boom, I've been able to free roll the trade. So again, that's things you can play around with. That third part of the trade, the active risk mitigation, okay, getting the risk out and then trying to sit and allow the trend to play out, but you're risk free, which helps create a carefree state of mind. But we're going to sit and then see if we can achieve that target there. So 1/3 at 2 times the initial stop loss. Great. 60, 68, 30, 36. That's absolutely fine. We'll keep our stop loss well, what I'd probably do now, to be honest with you, is I'd probably move my stop loss up around about break even or so. I'd probably be around about break even on the remaining part of the position now. It's how it'd be. So let's do that. So I want to see it hold there. Okay, starting to move. I don't like that bar. And now it's running into the top of the base. Okay, so you see this here. We get distribution here, distribution here. Okay, don't like that bar. I didn't want to see that. It's kind of now running similar character like it has previously. You see how it's building a little Darvis box in here? See how it built a little Darvis box in here? See over here, it built this Darvis box, breaks to the downside. So from periods of contraction come expansion, and that expansion is going to be one of two ways. Expansion to the upside, expansion to the downside. So expansion to the downside, not good. I don't like that. So what I would do here, guys, is I would take off 1/3 of the position. Okay, I'd just lighten up here a little bit, and that's absolutely fine to do. I'm not liking the character of the stock right now. Okay, it's kind of popped back up, opens pretty much on the high, goes out on session lows, deterioration in the relative strength line, does it on low volume. I don't like the bar. Okay, and if I don't like the bar, I don't like the bar. So I'm just going to take off 1/3 into the close there. Okay. Okay, pulling back down, the 50 is right there. Okay, it can kind of bounce off the 50, a bit volatile. I'm still in with my stop at like 63.01. I'd probably have my stop loss at like 62.97, just underneath the round number. Beginning to tighten in here. That's interesting. If I didn't have a position, maybe I'd be targeting a position. Okay, kind of tightening. Okay, moving to the upside. That was quite a good bar to be looking to target in there. I'd now have my stop loss on the remaining part of the position in here like this. I'd now be underneath those, underneath the 10, 21, and 50, underneath this little clustering in there as well. Do not like how that's reversing. So it's trying to break out of the base highs. See that? So it's context. Where's happening? What is happening, and where is it happening from a structural perspective? So you see that there? Okay, it tries to come out 52-week high, gets slammed immediately. I do not like that bar. Doesn't close below the 21. We'll give it another session. Okay. Okay, now turning around. So interesting, kind of breakout, fake out, and then turning around. So what I'd now do is have this stop loss. Okay, here, and you may be saying, well, you've only got 1/3 of your position on and the stock's now breaking. Yeah, but it's all hindsight, right? In the moment, I know why I was doing what I was doing there. It was very similar behavior to this. I didn't like it, and that's absolutely fine to kind of ease off when you're not liking the action that you are seeing. So stop is now at 69.04. Okay, pulling back down 21. Let's see what happens. There would be my exit coming into the earnings as well. Close below the 21. That bar there is going to be the exit for me. So in terms of our average gain, initial stop loss 4.5%. So let's say 8%. And then here we were selling at the close. We got 8, we got 5, and then we got 13. So we've got 8, 5, and then 13. So 8.67%. That's going to be a pullback. So we go Z scalar and we go 8.67%. Okay, that's that's kind of fine. Average gain coming in pretty good at the minute at 17.84 at 84%. So let's keep playing it forward. Let's see what happens on the earnings. Maybe we get kind of a gap up and then we can target something afterwards. Okay, not a good earnings reaction, kind of a nothing burger really, wasn't it? Let's see if this can kind of tighten. A little bit kind of choppy, and you may be saying, well, why are we not targeting it? See how this is just wedging up? Like, see here, it's like a V, right? See how that's just like wedging up? It's subtle, take years to kind of dial into that. But see here, it's just wedging up. Whereas here, when I said this is a pretty good setup, like here, it was more of that sideways. So what I like is sideways or down consolidations like that. See here, it's just like wedging up. I don't like that. I just don't like it, basically. So let's see if we can get some more kind of like sideways, pulling back down into key moving averages type action. Okay, kind of tightening. Let me zoom in here, something like this. Maybe I could have been targeting something there. This is trigger bar S for those of you who follow me for a while. Trigger bar S, low volume. Could have been targeting it. Benefit of trigger bars is often you get a really tight stop loss on them. Let's keep playing it forward. It's still tightening. It's not bad, right? It's not bad. This kind of action in here. It's not bad. RS line is actually turning up where you get that tight bar. Yeah, let's target that, right? So this is going to be a trigger bar. It's going to be a tight stop. But we'll round it up. We'll call it a 3% stop on this one. So 3-year-old target's going to be there at 90.44. And we don't get filled. That's why I use buy stop limit orders. So don't get filled because it doesn't go through the high. However, we now get a shakeout demand tail. I could be targeting that shakeout demand tail. So through the high, stop underneath the low. What I then quite like is a 4%. We'd round it up to 5%. I feel like we're kind of pushing it a little bit. The And what I quite like is the lower the bar undercuts a lot of these lows. You see that how it's undercutting a lot of these lows, shake out a lot of weak hands, volume doesn't really pop on that, just tells me there's not that much supply. Yeah, I'd probably target that, why not? Purpose of this YouTube video, right? We'll target it. It didn't get filled anyway, that was a waste of 30 seconds, wasn't it? To the 50, but I don't really like that bar. Gap down, open near the high, sells off a bit, yeah, a little kind of shake out demand tail, but look at the deterioration in relative strength. Okay, I'll see if it kind of tightens and resets. Okay, can we get some higher low? No, just not feeling it. Okay, stock's now in a downtrend. No interest, no interest. We want it back above the red line, which is going to be the 200-day. Okay, we're back above the 200-day moving average, back above all the moving averages. Not good reaction to the earnings. It's all a bit choppy at the minute. I want to avoid all of that. So again, just by going below the 200-day, I'm not playing in it. So we just avoid all of that chop, right? So let's play this forward. So I'm looking for specific candlesticks around certain moving averages. That's not bad. Good ADR on it as well. One of the issues is this bar here, quite distributional, this bar here, but then it starts tightening in that region in there. What would my initial risk be on the trade? 3%, call it 4% off an ADR of 5. Yeah, it's okay, we'll target that. Okay, so that's going to be our entry there. Free roll target 72.23. There we go. We've been able to free roll the trade. So again, work through the process, identify. So it's a trigger bar sitting on the 21-day EMA. The volume dries up quite nicely, but look like Darvis box type action here. See how it's consolidating, the volume dries way up. Nice, the RS line held up pretty well as well. But now I've been able to free roll the trade, so risk-free trade to create carefree states of mind. So now I'm just trying to see if a trend will play out, and let's see how far the trend wants to go. Okay, moving to the upside here. Okay, nice. Let's just get kind of a stop loss level in. Where would I be? I'd be break even now on that stop, just above break even. So pulling back down, don't like that. Change of character, closes below the 10-day. I'm gonna take a third off there. I would then have a stop at on the remaining third. Yeah, 68.47 looks about right to me. A little bit of room underneath the 21. Okay, big kind of shakeout there. I would now just put my stop loss on the lower of the bar, so that shakeout didn't get us, but lower the bar, this thing closes below the 21. I'm done with it. Okay, pops to the upside here. Let me adjust the stop loss up like this. Okay, so I'm looking to ride the 21. If there's a spot to add, I'm looking for a spot to add. Gap down reversal bar. That was a little gap down reversal bar. Maybe not. That was an okay setup. I think I missed that one. Is what it is. Okay, I'm just looking to ride the 21-day. Okay, with the remaining third of the position. Could I have targeted if that was a green real body instead of a red one? Probably would have gone for that. I think it was just I was drawn to the red and went because it kind of opens on the high and goes out on the low. If that bar there looked like that bar there, or looked like a green hammer type candlestick, would have been a pretty good setup actually. Hey ho, is what it is, right? So looking for the first close below the 21-day EMA. We haven't had it yet. Okay, can it kind of tighten? Not seeing quite what I want to see. It's a little bit wedgy up here. Is that below the 21? Yeah, for me. What would I do? Yeah, for me, I think for me, what I'd do is I'd place my stop loss on the lower of the bar there, just underneath it, and go, right, could turn around and gap up or stop me out. Absolutely fine, right? So let's go take a look at this one. So initial risk is 3%, so we're free rolling at 6%. So we've got 6%, we've got 8%, and then up here, so we've got 6, 8, 83. Okay, so 6, 8, and then 83 like this. So that means the gain on the trade there is going to be 32%. That was a pullback buy. So we're going to go Z-scaler, we're going to go 32.33 like that. So again, you can kind of see the variance here, that you're going to have some that are kind of okay, some that didn't really go anywhere, like this one here, like 2.5%, nothing to be kind of yelling home about, right? But then you have some of the ones that come in that are 28%, 32%, and this is the 80-20 principle, right? That 80% of your profits are going to come probably from around about 20% of your 80% of your profits going to come from around about 20% of your trade. So let's keep playing this forward. Maybe we'll get like a shakeout on the 50-day. Let's go have a look, right? So let's see what happens in here. Okay, wedging up. Okay, pulling down to the 50, little shakeout demand tail on the 50. I don't really like how it got to the 50. I'm not a big fan of those bars there, so I would actually pass on that one. Yeah, it just didn't look quite right how it kind of pulled down and got to the 50. That was a pretty good setup there that I just went too quickly by. That would have been a pretty good setup. Maybe would have been able to free roll it by now. Yeah, would have been able to free roll it. And again, it's kind of that context of, okay, so it kind of pops, you see a bit of demand coming through here, and then just that low volume pullback. Look at that, that's a good bar. 10, 21 and 50, shake out demand tail, nice. I missed that one, okay, that will happen. You'll miss trades, don't worry, you'll miss trades. So let's play this forward. Don't like that bearish break, did you see it? Don't like that there. That's going to make me a little bit suspicious for the next kind of couple of weeks or so in terms of what happens. Okay, good demand now coming in, we like that. So can we now get something around the 10-day EMA? Okay, to the 20. What do we get? What do we get? It's not a bad bar. Reversal bar in there. What are we looking at there? Okay, initial stop, what are we talking? 4%, we'll round it up to 5% off an ADR of 4%. It's just kind of acceptable. So our free roll target's basically going to be the base high. Let's see what happens. Okay, we get the gap up there, so that's going to be our entry. Let's play this forward. Can we free roll? Yeah, so we're able to free roll the trade. Great. So we free roll the trade. What I do here now is actually backstopping a profit overall on the trade by putting my stop loss pretty much to break even. That's going to be if we get knocked out there, it's going to be a loss of around about 1%. I'd be literally on the 21-day MA, okay? Because again, what I'm now expecting is this pop, bit of a testing action, and then the reversal. That's the framework I have in the head. So let's play this forward. Okay, acting well. I'm just going to backstop in a bit of a profit here now, just maybe locking about 1%. Okay, change of character, right, clear change of character. That's a third off there, no questions asked. That's the exit. I know I hadn't quite been stopped out. That's the exit for me, right? So what are we looking at there? So we had initial stop of 4%, so we're free rolling at 8%. So we've got 8, we've got 7, and then 1. So 8, 7, 1. Like that. Sounds like a boy band, 871, doesn't it? That's going to be, what type of, it's more of a pullback buy as well. You can see that I'm kind of favoring pullback buys, aren't I, right now in this stock? But that's actually the character of the stock, right? So again, there's another one in there, great. Let's remove those lines. Let's then play this forward. Maybe something around the 50-day. Let's go take a look. A bit wedgy uppy. Okay, 50-day shakeout demand tail. I think the risk is going to be too wide on that. Yeah, 8% off an ADR of 4%. Not going to happen. I'm not going to do that. The risk is way out of whack right there. So let's keep playing this forward. Okay, a little bit sloppy, the action here. A bit sloppy. If it gets below the 200, we'll just fast forward it. Okay, back above the 200. Bit up, bit down. Okay, to the 21, shakeout demand tail. I'm not a big fan of the 4 prior candlesticks. I don't like how it got there. So again, a lot of it is, okay, you see a shakeout demand tail-esque on the 21, but how did it get there? That was then a really good gap down reversal bar. I just played it forward too quickly. That was a really good setup, by the way. That one right there. I missed that one. I missed a couple of good setups, haven't I? Such is the nature of kind of going fast. But this is why with my own screening, this is starting to tighten up quite nicely. With my own screening and my own scanning, I do it when the market has closed. That's when I start the screens. Why? Because I can just slow as smooth as fast, slow it down, focus on what I need to focus on. This one here, initial stop of 3%. Yeah, I like that. We actually have an entry there, just moves through the high. Okay, a little bit of patience maybe. Let's see if this can start going. So can it get to our free roll target? 259.36. Highlight bar there is 259.84. Yeah, nice free roll it there. So what I'd then do here is I'd push my stop loss up to basically, yeah, just underneath the low of the bar, effectively like break even. Now I'd be pushing it up into a kind of marginal profit. So again, stock's getting out nicely. 10-day, 21-day. We're going to be looking to ride those. Yeah, close below. That's just bearish change character. I'd definitely take a third off. I'm considering just exiting the entire position. We'll give it one more bar. I'm going to put a stop loss just there, kind of tighten up. I don't like the bar right here. Gap up, opens on the high, gets sold into. Here, gap up, opens on the high, gets sold into. Volume increases. It could just be a clear exit. It's a clear change character. I'll give it a chance if it can put in like an inside bar. No, shake out demand out, so I get knocked out. There. So initial stop loss of 3%, so we're free rolling at 6%. So we've got 6%, we've got 10% and 7. So 6, 10 and 7. So we go 6, we go 10, and then we go 7 like that, and that's going to be a more of a breakout buy. So let's go and put that in as a breakout buy. We go Z scalar, we go 7.67%, like that. Okay, great. Let's then play this one forward. Okay, kind of tightening in there. Maybe around the 50. Okay, to the 50 inside bar. Yeah, I target that one in there. 3%. What's our initial stop? Initial stop 2%. Yeah, I like it. Let's see what happens. That one there, I don't know what would have happened on that day there, because it kind of opens and then it either opened and went down or pushed up higher. Can I go down to the 1 hour chart and we can see? Okay, I would have been knocked out. Okay, so here it looks like it opens here. I'm going to say it went here and then I would have got stopped out there. So that's fine. 2% loss, first loss of the kind of session. That's absolutely fine. So it's a pullback buy, loss there. So we go -2. Like that, that's fine. This average loss will update and show it as say 2%, but I need to get an average loss in the breakout. Hoping I don't get an average loss in the breakout, but just for the spreadsheet average gain there to be working. So yeah, that's fine. Let's see what happens here. That was okay in there. See how it kind of pops high low. Yeah, like the 52-week high is now coming through on this on this stock. So let's play it forward. Okay, into the earnings. Don't like that on the earnings. Change character. You see that? What do you think the bigger boys and girls are doing there? Don't look like they're buying much to me. Looks like they're distributing, so I'm going to be very nervous until I see real evidence of demand coming back in. Yeah, downtrend, below the 200. I have no interest in it. No interest, no interest, no interest, no interest, no interest. Get back above the red line. Above the red line, and this is just the identification process. Just know what it is you're looking for. Like, I have no interest when the stock's doing that. Okay, all of this just guff here down 70%. I have no interest in the stock there. Okay, but what do we see? Okay, popping the volume here. Okay, reaction to the earnings, back in an uptrend. RS line turning up. Okay, now I may want to be playing with the stock. Okay, so let's see what we get. Okay, low volume pullback to the 21-day EMA. Interesting. That's going to be pretty tight, isn't it? 2.5%. Yeah, I don't mind that. 2.5% off an ADR of 4%. It doesn't get triggered, but I think I'm going to be targeting the very next bar because it's so tight on the 21. That's pretty tight. 1.5% initial stop. Like it. I don't know what happened on that day. Let's go take a look on the 1 hour chart. So this one here, I would have cancelled. I'm imagining this bar here. It gaps down. Okay, sells off, then moves through. I don't like it when it gaps down and undercuts the low of the prior session. So I would have cancelled my order there. However, I'm going to be tough on myself and I want to get the average loss working as well. So I'm just going to put in here, I'm going to say breakout for Zscaler -2%, because then the average loss will show as -2. It was irritating me a little bit, okay? But there we go. Anyway, so what have we got so far? We got an average gain of 14.995%, an average loss of 2%, win rate of 77%, risk versus reward of nearly 7.5. I'm pretty darn pleased with that, right? So let's keep going forward here, but for me, I like using a buy stop limit order. If the stock undercuts the prior session's low, I cancel the order because the stock is not acting right. The stock is not doing what I want it to do from an identification process. Okay, so let's keep playing it forward. That's getting quite tight in there. I quite like that. So we could target that there. That's kind of like a low pivot breakout, 2.5%. Off an ADR of 3.5%. Yeah, it's not bad. Okay, didn't fill. That's absolutely fine. Play it forward. Okay, that was quite a nice bar coming through in that. I went too quickly again. That was a nice bar. Hey ho. Okay, would have been kind of a break-even trade, just a scratch. It's choppy, choppy, choppy. Back in an uptrend. Okay, looking for setups, and you may be wondering, how do you go so fast? It's because I've looked at millions and millions of charts. I know specifically what it is I'm looking for. I like this gap down reversal bar on the earnings. Look at the 52-week highs coming through. So it's gap down reversal bar, kind of like gap down, pull down, shake out demand tail to the 10. The issue is what base is it? It's not really a. I'll target it. Purpose of this YouTube video, 3% off a 3% ADR. Yeah, that's okay. Did we get filled on that bar there through the high? Yep. So we have an entry there. Let's see if this can move to the upside. So we're looking for, what's that bar there, dude? That's not a bad looking bar. So we're looking for a move to 210.50. So great, we're able to free roll the trade there. I'd now move up my stop loss again, kind of pop test reversal. I'd now have my stop loss probably there, like literally stop loss break even for me now. Yeah, pushing the stop loss up a little bit now, something like that. So let's see how this trade wants to play out. So looking for closes below the black line being the 10-day or the blue line being the 21. That there, full exit for me. Change character, gap down, open on the high, deterioration, yeah, full exit for me. So our initial stop loss is 3%, so we're selling at circa 6%, and then this here is 6%. So 6% average gain, that's going to be a breakout trade. So we go here, Zscaler, and we go 6% like that. So we'll keep playing it forward like this. Let's see what happens. Does it pull back to the 50-day? Okay, it kind of pops back up there. That wasn't bad how it kind of like tightened in there. Maybe it would have been all right. That's all right, but it would have gapped, so I doubt I would have got filled there. Okay, keep playing it forward. Okay, gap down, shake out tomato, and that's the final bar. That's the final bar there. So let's go and take a look at those session stats again. If you want this Google sheet, it's available, description, comment section of this video. I'll put it somewhere for you. So if we go and take a look at the overall stats, our average gain there of 12.92%, our average loss of 2%, win rate of 80%, risk versus reward of 6.46. I'm very happy with those session stats. If any of you are experienced traders, you'd say that's pretty darn good. I'd say that's pretty darn good, right? And then what's happening here as well. So if you go and take a look, and it's the point I made earlier, right? And again, this is kind of just understanding distributions of wins and losses, and when we're talking about the wins as well, it's understanding the 80-20 principle. If you look at these, there's only two stocks there's only two trades that really move the needle, right? It's the 28% gain and the 32% gain. The other ones are kind of like, yeah, whatever. It's kind of like ticking over, right? But it's not really moving the needle. So you never know which kind of trade is going to move the needle. But that is the point I think about being an intermediate term trend follower. Okay, I'm trying to play, and then in terms of that bell curve and kind of getting the skew out here for where you get those big gains coming through, that's what I'm playing for. So that's why I like riding certain moving averages, 10-day, 21-day, potentially the 50-day if I think prudent for the stock. So you can see here that 80-20 principle, that 80% of the profits are likely going to come from 20% of the trades. And you can kind of see that here. What did we do? We did 10 trades. Out of the 10 trades, there were two big winners. Literally 80-20 principle, right? So 20% of the trades were big winners, being 2 out of the 10. So anyway, I hope you have found that session there useful in terms of actually how to think about trading in terms of identify, control, mitigate, and optimize. Realize that each part of the trade is a skill set in which you can improve. And I think bar by bar deliberate practice is a great way to do that. Peak by Anders Ericsson is a fantastic book. For me, it was a life-changing book. I would highly recommend it to any trader out there who really wants to improve, or anyone that wants to improve at a skill-based activity. That's Peak by Anders Ericsson. So I really hope you guys have enjoyed this video. If you want to learn more about that, head over to my website. We have lots of other YouTube videos on the channel as well, all about this style of trading.